Hey everyone, it is Evan here from the Trade Risk on Tuesday, September 17th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we usually start off with the technicals dashboard, but we have a little bit of data issues or a little bit of blip in the data right now. So that is not up to date, not the latest. So I'm going to skip the general overview of the markets and just jump right into charts today. Really, we haven't missed a whole lot. If you watched our weekend video from Friday, markets really haven't moved too much in terms of equity markets anyway. There's been some other good moves, which we'll talk about later in this video, but in terms of equity markets, it's been a very quiet week. In fact, we're looking at the S&P 500 here. This is the cash market weekly time frame, so each bar represents 1 week worth of trading. You can see, of course, it's Tuesday, but the market hasn't moved. We're down just 2 points here, minus 0.09% as of Tuesday, and of course, we're inside entirely the range from last week. So we have not a whole lot of movement going on this week, lots of digestion of last week's upside move, and we also have the Fed out tomorrow. So we have more a sort of a catalyst that the market is potentially looking at tomorrow, whether or not a rate hike happens and future expectations of hikes. So all of that will be kind of unfolding tomorrow, and we will have some market reaction to that. So that'll be something to pay attention to for tomorrow's session. But in terms of what's going on right now, in terms of levels to pay attention to heading into that, it's basically all of the same levels we mentioned or we talked about in our last video. It's the all-time highs up here around 3,028 in the S&P 500. Those were the all-time highs set in July of this year, and we are just kind of hovering below them right now, waiting to see if the market's going to tackle them, looking to see what the reaction's going to be if we can get up there, and that's what we're sort of looking at in terms of upside levels from where we stand right now. That's the only thing that stands between us and all-time highs. It's about a 1% difference in the S&P 500. And on the downside, if we start to rotate down here, if we start to see an unwind or negative event after the Fed tomorrow, 2950 or last week's lows around 2957, that's going to be the area that we want to see this market hold and defend. We just broke out above the August range here 2 weeks ago, or about a week and a half ago, and that's what we're going to want to see hold in place. We're going to want to stay above the upper end of the August range here to keep this market acting as bullish and as healthy as possible. So the same sort of comments from last Friday's video. It's the bulls market to lose right now. Trends are up. Momentum is still holding higher. And we are looking to see if the bulls can continue to add to this, add to their recent gains, tackle these prior all-time highs, and then eventually or potentially break out and start to trend to new highs from there. The bear case, of course, is that the market is going to reject, or perhaps it already rejected last week, and we're not breaking out here. We are, in fact, still range bound, and the market will fail here under this 3,000 area in the S&P 500. Maybe tomorrow's the catalyst that sets us back downward into this range, and we have more chop to be had. Those are the two scenarios right now, based on sort of the technicals, the trend, the momentum, the breadth that we look at. We, again, still think that the bulls have the benefit of the doubt at this point, and until and if we start breaking some technical levels, we're going to try and stick to that outlook in the near term. So that's the S&P 500 levels, 2950 to last week's lows. On the upside, 3,028 or so, and those would be the all-time highs. Now, the big story last week was the Russell 2000. The Russell 2000 had one of its largest weekly gains in the past several years. It ran right into this resistance here, around 159 or so. That's what's been containing price. That's where we've been trading below for the past year at this point of in the Russell 2000, and that's what we really need to see broken out and a breach of resistance is over 159, call it 160 for the Russell 2000. If we can start to break above this year-long resistance, that bodes very well for the broad market. That potentially could lead to some rotation or maybe finally some catch-up and outperformance by the Russell 2000, which is what we really haven't seen in over a year's time at this point. So Russell 2000, again, very quiet week so far. It's just slightly higher here, but basically flat in 2 days worth of trading. We're still bumping up against that resistance, and we're going to see if we can get that breakout here, a follow-through week, if you will, to the upside to finish out the week or perhaps next week. Finally, if we go to the NASDAQ 100, you can see here, again, very quiet, flat here on the week. It's an inside weekly print so far. We're just off of these all-time highs made back in July. We're about 2%, less than 2% away in the NASDAQ 100, and very similar to the S&P 500. We're basically looking for some sideways consolidation and then waiting to see if the bulls can attack and continue this trend to the upside and continue a potential breakout here if it can get back above the prior July highs. So that's the landscape heading into the Fed tomorrow. Of course, the Fed could sort of derail things. We could get, a wrench thrown into the mix here, and maybe we start to pull off of these levels. Anything is possible, but for now, our bias is to the long side, following the trend, momentum, and recent progress the bulls have made over the past 2 weeks. So that's the general landscape there. Let's take a look at some other major markets here. We got TLT, which is popping higher this week. It's up 1.82% so far this week. It had a real ugly week last week. It fell pretty hard here, pulling back, working off some of the very stretched behavior that we saw back here in August. So sort of like we talked about last week, it is, reasonable, I think is the word to describe it, reasonable to see the pullback here, the reset of the froth from this latest leg higher as TLT got really vertical there. Of course, you never want to see stocks come slamming down on heavy volume with an expansion in range lower. That's never a good sign if you're in the bull case. But I think as long as we can still hold above, 133 or so, even better if we can start to or continue to hold above this trend line that has been in place for most of this year. If we can start to hold those areas, I think we can contain the damage, and I think it could just be kind of walked off as normal kind of uptrend behavior here. Yet to be seen if that's actually going to be the case, but so far we've got a little bit of a bounce going on this week, and we'll see how the bulls can if the bulls can come in and step and defend this 135, 136 area or above. If we look at metals next, we go to GLD. You can see here it's been pretty quiet this week. It's up 1%, but still kind of quiet overall here. Ranges kind of slightly compressing over the past 2 days or so this week. We are, coming off of a little bit of a pullback from last week. We do have this nice uptrend still intact, and again, kind of similar to the TLT, we're looking to see if buyers step in, put in some type of higher low, and defend the recent trend that has been in place for most of this year. Silver also kind of a similar situation. It had a strong gap up to start off the week on Monday of up 2.5%. It added to those gains here on Tuesday. And once again, it kind of reset the froth here last week. It was getting pretty vertical here towards the end of August. It quickly corrected itself. It kind of came back down to, the rising trend lines and some prior supply and trading ranges. So we're looking to see if this can sort of settle out and if the bulls can step in and defend this general area. Now, most importantly this week was oil. Oil was front and center this week in the headlines and making some big moves. It was up 14, it's actually as much as up of 16% on Monday of this week, but it did close up 12% on Monday. It pulled back here on down 4% on Tuesday. So it did reset that a little bit, but it is trying to resolve this chop in here that it has been in for quite some time. So about 2 months worth of trading, it's been dancing below this $12 area, mostly between $11 and $12, just consolidating sideways. And we got that big breakout last week, or I'm sorry, yesterday on heavy volume. We're pulling back now. It'll be interesting to see, of course, how how the headlines and some of the developments there in terms of production and what comes back online, and how that will influence what this recent breakout here. But $12 or so, that's going to be the general area that we want to see USO hold above. If you are bullish here, if you want to see breakout and continued success, you'd like to see even some of that gap hold, and $12 really kind of firm in there as a spot that buyers step in, and we'll see if that happens throughout the course of this week. You want to pay attention to this weekly bar because it is up 7% so far, well off of the highs, but still up 7%. You can see volumes already above the 20-day average, and of course it's only Tuesday, so there's going to be a heavy volume week here. It'll be interesting to see how supply-demand dynamics finish out the week. Last but not least is natural gas. Natural gas here you can see is continuing its upside march. This trend remains strong. It is extended to the upside, of course, but momentum is staying bid. The trend is holding up there, and bulls are getting a sort of victory lap here for the first time in a very long time for natural gas. So for now, trend is up. Bulls in control here, and we'll see how far they can take it. If we go to the weekly chart, you can see we took out the July highs. We're coming back up towards, say, the May highs in here, where we stumbled around this $23 area. So it'll be interesting to see if we can, if we can actually take this this spot out as well, where the market failed about 5 months ago. So that is it. That is what I have for the midweek video. Remember, Fed's out tomorrow. Do still have some earnings, actually. Saw hitting the tape. And be interesting to see if some of the big levels we're looking at here in, say, the Russell 2000 and even the S&P 500, which are getting close to tackling these prior all-time highs, how the market deals with those. And we'll be back here, of course, on Friday of this week to recap and find out how everything settled out to go into the weekend. So that's it for me. Thanks so much, as always, for tuning in. You can subscribe on our YouTube channel or follow us on the Trade Risk. Have a great rest of your day, and we'll see you back here tomorrow for our midweek trade ideas video during the market session.